Welcome to the Deep Dive. Today we are strapping in really for the 2025 edition of what might be the most crucial geopolitical race right now. The battle for AI dominance.
Yeah, it's definitely moved beyond just silicon or software.
Absolutely. It's now the core battleground for, well, everything. National sovereignty, economic security, setting global standards. We're really entering what our sources are calling the intelligent internet era.
That's a good way to put it. Let's say, the fuzzy competition phase, that's over. By 2025, both the US and China, they've laid down very different but very clear national strategies. And they're both aiming for leadership, technically and economically.
Right. And for investors, traders, anyone operating in this pretty charged environment, understanding these two diverging paths is just critical.
It's essential, really.
So our mission today is to break down these two strategies. We've got the U.S. goal, and it seems pretty explicit, to systematically push China out of the high-end AI value chain. And then China's response, which is this sort of asymmetrical double-wheel drive strategy.
Yeah.
We need to figure out how these competing plans create risks, but also, opportunities for you, the listener, the investor.
And look, before we really unpack all that strategy, it's worth reminding everyone that, well, navigating these kinds of high stakes requires solid insights.
Exactly. That's why we always say, know China to do better business. Save time and money with expert insights on China trade and investment. Welcome to our channel, Trade with China. Welcome to our channel, Trade with China.
Okay, let's get into it.
Okay, let's unpack this. So let's start at the top, the macro strategy, because the difference is fundamental, isn't it?
It really is. Two completely different philosophies.
The U.S. model is being described as innovation-guided, market-driven, nation-backed. And the big change here was that policy pivot, reported early 2025.
Yes, the really swift repeal of the previous administration's Executive Order 14110, that one was heavily focused on risk and ethics.
Right, and this repeal was a very quick strategic signal, wasn't it? A fundamental shift.
Yeah, absolutely. The whole U.S. national AI strategy pivot went from sort of building guardrails to aggressively unleashing constraints. That's the language used in the American AI Action Plan.
Unleashing constraints sounds, well, aggressive. What does that mean in practice for companies on the ground in the U.S.?
It means pretty comprehensive deregulation. The idea is to maximize freedom for innovation, especially for these designated national champion enterprises, the tech giants leading in foundational models, cloud services.
So less red tape for the big players.
Much less. They're allowed accelerated deployment now, operating under what's being termed minimal viability ethics.
Minimal viability ethics.
Yeah.
Okay. And the strategy also involves defining AI alignment strictly through American values. And the sources note this explicitly removed topics like diversity and climate change from the NIST risk framework. So ensuring AI aligns with the current government's priorities.
So the government isn't directly doing the R&D, but it's acting like a huge accelerant for the market leaders, essentially de-risking the regulatory side for them. Exactly, and providing significant backing. The state support, it's not cheap. We're seeing national backing for huge private super projects.
Like Stargate.
Like the Stargate supercomputing project. We're talking multi-$100 billion scale involving companies like Microsoft and OpenAI. The White House gave it formal backing. It's a massive investment.
Wow. But if the government is underwriting these enormous private ventures, giving them deregulation cover and billions in support, doesn't that create its own kind of political risk? Is the risk here just financial, or does it maybe create a sort of dependency loop for these national champions? Could it stifle smaller innovators outside that chosen circle?
That's a really critical point, and probably the main tension. The stated goal is securing absolute computing dominance, whatever the cost, to ensure U.S. tech leadership, even if that means concentrating power in, well, just a few hands.
And they appointed a czar to manage this?
Right. A market-oriented figure, someone like David Sachs mentioned in the sources, as the new AI and cryptocurrency czar. And their job is coordination, pulling all the policy levers, export controls, talent visas, everything towards one single goal: winning the AI competition against China. It's a very focused, whole-of-government push supporting key private players.
Okay, so that's the U.S. picture. Now here's where it gets, as you said, really interesting. China's path. It couldn't look more different, could it?
Totally different playbook. Their model is state-led deep fusion.
And the key policy here is the State Council's AI Plus Action Plan from August 2025.
Yeah, and this AI Plus signifies a big shift. AI moved from just being an R&D focus, a technical thing, to becoming about deep industrial empowerment.
Deep industrial empowerment.
China is leveraging its, state capacity for strong top-down planning to hit some massive targets. They're aiming for intelligent terminal and agent adoption, think smart devices, AI assistants, to be over 70% by 2027.
70%, that's huge penetration.
It is. And by 2030, the goal is for the intelligent economy to be a major driver of national growth.
And the sources are calling this AI plus concept a cognitive revolution, right? Changing how decisions get made across the board.
That's the core idea of deep fusion. It's not just about bolting AI onto existing businesses. It's about fostering entirely new, smart native enterprises and fundamentally restructuring how entire industries operate: manufacturing, healthcare, energy, you name it.
And the state is building the foundations for this.
Exactly. The state is proactively building the infrastructure needed. Things like unified compute scheduling networks, data exchange markets, and really pushing forward huge projects like the East Data West Computing Initiative.
Right, moving data centers west for cheaper power and land.
Precisely. It ensures a supply of low-cost, large-scale computing power for training their own foundational models. That's the fuel they need.
And what about their global vision? Because their approach to AI governance seems completely at odds with the U.S.
Absolutely counter. China's been actively promoting its global AI governance initiative and action plan. What's really interesting is how they frame it. They link AI governance directly to development rights, national sovereignty, and tech sharing.
So more inclusive.
They're definitely positioning it that way, advocating for inclusion, particularly for the global south, pitching themselves as a champion for a global AI approach that lets everyone participate, which contrasts sharply with the U.S. framework, which is more rooted in, specific democratic and human rights values and tends to be more exclusive.
So it's a battle over setting the rules of the road, basically, and who gets to drive on it.
That's a good analogy.
Yeah, okay, so let's talk about the U.S. counterpunch. The strategy isn't just broad containment anymore, is it? It sounds much more targeted, this three-precision system.
Right. It's described as surgical strikes. And it's a whole-of-government effort, really focused on market competition, not just defense in the traditional sense.
And this targeting, this is where the real operational risk comes in for investors dealing with Chinese tech, right?
Exactly. This goes way beyond just stopping military tech transfers.
So, precision one, strategic thought. What's the basic shift in thinking here?
It's a move away from the old Cold War idea of non-proliferation, just stopping weapons tech. The new doctrine is basically absolute commercial leadership equals national security. Meaning the goal is to secure a long-term, undeniable U.S. monopoly in the global commercial AI market, using state power to make sure U.S. companies win commercially worldwide.
Okay, and that thinking leads directly to precision two, target selection, which is very specific, company by company.
Highly specific. It's tailored. So for established state champions like Huawei, policy is simple. Full, strict technical blockade, chips, EDA software, the works.
Or keep them completely cut off.
But for the big commercial giants, Alibaba, Tencent, companies like that, the strategy is more nuanced. It's about setting a compute ceiling.
A compute ceiling, how does that work?
They're allowed access to next-tier chips. Think NVIDIA's H20 chip, for example. It's powerful enough for them to maintain their current commercial cloud businesses, keep things running.
But crucially, they're blocked from the really top-end strategic level chips.
Exactly. They're strictly prohibited from getting things like the B200. And this is the key point. The B200 is what you need for that cutting-edge, next-generation foundational model training, the kind that determines global leadership. The H20 keeps the lights on, but it effectively locks them out of innovating at the frontier of foundational models.
So the ceiling ensures their core models will always be, a generation or so behind the U.S. leaders?
That seems to be the goal, yes. Keeping them competitive in current services, but strategically contained in future development.
And there's a third part to this precision targeting, early strangulation.
Yeah. This targets high-potential Chinese AI startups. Maybe in AI drug discovery or embodied AI, robotics. The idea is to quickly add them to export control lists or investment blacklists.
Cutting them off early.
Right. Cut off their access to U.S. capital, talent, and crucial technology before they can scale up and become serious global competitors. Nip them in the bud, basically.
Okay, then precision three, ecosystem isolation. This sounds like it goes beyond just government action and hardware.
It does. Hardware isolation is still key, of course. Maintaining that generational gap, relying on NVIDIA's dominance with C-Day and Blackwell, keeping ahead of Chinese alternatives like Huawei's Ascend 910B.
But there's a new software barrier emerging.
Yes, and this is critical. Top private U.S. companies, the source mentions Anthropic as an example. Around September 2025, they are independently restricting API access to their most advanced models for users in China.
So even if the chips weren't an issue, the best software tools are being walled off.
Exactly. It creates a service barrier. Millions of Chinese developers can't easily access or build on top of the world's most advanced AI models anymore. It forces them into a relatively more closed ecosystem just by turning off the service tap.
Wow. Okay, that's a multi-pronged, very precise containment strategy.
Yeah.
So how is China responding, this double-wheel drive strategy? It sounds like asymmetric warfare.
It is. It's pragmatic. Facing this kind of surgical containment, China's focusing on resilience and playing to its unique strengths, creating independent value where it can.
So what's the first wheel? Open source ecosystem.
Right. Two parts to this. Domestically, they're using their state power, their institutional advantages, to push the adoption of domestic software and hardware ecosystems. Think Huawei's Canaan platform, Baidu's Paddle framework.
Mandating their use in key sectors.
In key national sectors, yeah. Finance, energy, government services. This guarantees a large internal market, provides demand, acts as growth fuel for these domestic ecosystems.
And the external part of this open source wheel, winning influence globally.
Exactly. This creates a really stark contrast with the U.S. approach. Chinese companies, names like DeepSeek, Moonshot AI, are mentioned they're becoming major contributors to global open source AI. They're releasing high-performance models, often close in capability to the closed Western ones.
Offering alternatives.
High-quality, low-cost, and importantly, customizable alternatives. It's like, the U.S. is selling the top-of-the-line, locked-down luxury car that needs U.S.-only parts, while China is handing out the engine blueprints for a pretty good car for free to everyone.
That's a powerful metaphor.
It appeals strongly to developing nations, to smaller companies globally. It positions China as the AI enabler, trying to democratize access, versus the U.S. as the technical gatekeeper, controlling the cutting edge. It's a fundamentally different play for global influence.
Okay, that's wheel one. What's the second wheel? Scenario breakthrough. This sounds like trying to sidestep the compute ceiling problem altogether.
That's the core strategic insight here, I think. China is leveraging things the U.S. can't easily block. Its massive internal market, its complex urban environments needing smart solutions, and crucially, its complete industrial supply chain.
Driving innovation in specific areas.
Yes, focusing on areas where brute force compute power from the absolute latest chip isn't the only determining factor. The primary example given is embodied AI, basically robotics.
Robots.
Yeah, the convergence of large models, the AI brain with robotics, the physical body. This plays directly to China's strength. Its world-leading manufacturing capacity, and its already high installation rates of industrial robots globally.
So building smart machines where the physical execution is as important as the AI model itself.
Precisely. This creates a whole new high-growth sector, smart factories, logistics robots, service robots that is potentially less dependent on having the absolute #1 B200 level chip for training. It opens up a new value chain, one they hope can be more self-sustaining and resistant to U.S. tech restrictions.
Okay, that makes sense. Shifting the battlefield. So let's bring it all together. We've got these two massive competing systems being built out in real time. For our listener, the investor, the trade partner, what are the concrete takeaways? What does this all mean?
Okay, first, risk assessment is absolutely paramount now. The U.S. strategy, these three precisions, they create a very real, very high technical barrier. Meaning, if your company operates in China and relies heavily on accessing those top-tier global AI APIs for your product's performance, you face risk. Or, if your domestic Chinese partner needs that B200 level compute for their own next-gen model training, they face extreme, targeted operational hurdles. That compute ceiling is real.
What does hitting that ceiling look like in practice for a business? How would you see it?
You'd see your innovation cycle slowing down relative to global competitors. If rivals outside China are refreshing their core AI models every 6 months, using unrestricted access to the latest chips, and your China-based operation is stuck on older hardware like the H20, well, your model performance starts to lag. Latency might increase. Over time, you become less competitive commercially.
So investors need to really scrutinize those compute dependencies and model refresh cycles.
Immediately. It's now a critical due diligence point.
Okay, so where are the divergent opportunities then, based on these national plans?
Well, in the U.S. ecosystem, investment is likely to stay concentrated in those big national champions, right? The ones focused on pushing the boundaries of foundational models. It's high risk, potentially high reward, aiming for that absolute technical peak, often with state coordination behind it.
And in the China ecosystem?
Opportunities look different. They lie more in the application layers driven by that state AI plus plan. Think smart manufacturing solutions, AI-driven healthcare diagnostics, smart city infrastructure management. These areas offer massive scale and have strong state backing, providing a degree of demand certainty.
And that robotics focus, the embodied AI.
Yes, that emerging embodied AI sector is becoming a really strategic investment area in China, precisely because it's somewhat insulated from the pure chip race. So look at companies in smart factory automation, autonomous logistics for delivery, service robots for hospitality, or elder care.
Sectors leveraging China's industrial base.
Exactly, and protected by huge domestic demand. For investors looking at China, these might represent a relatively safer, state-supported bet compared to trying to compete directly at the foundational model level against the U.S. blockade.
And finally, this is clearly creating a split in the global market, isn't it?
Absolutely. China's push with open source, this inclusive digital Silk Road vision for AI, it's gaining traction, especially outside the West. This is creating a potential parallel tech stack, a parallel market opportunity for global companies maybe looking to avoid being locked into the U.S.-governed ecosystem entirely.
So the choice for investors is becoming clearer. Optimize for the absolute technical peak and control, which probably means aligning with the U.S. system.
Right, or optimize for massive scale, application-level resilience, and state-backed certainty in specific value creation scenarios, which points more towards opportunities within the Chinese system, particularly in areas like embodied AI and industrial applications. Two different paths, requiring different strategies.
It really feels like the ultimate contest here isn't just about chips or code anymore. It's a test of which whole paradigm the U.S. trying to maintain the technical peak through tight control, or China pushing for this resilient, broad, value-creating technological inclusivity, which one will prove more attractive, more sustainable for global development moving forward.
That's the big question, and understanding that dynamic is key. Which is why we do this. Look, this channel will bring you practical knowledge to navigate business, investment, culture, economic trends, and communication tips in trades with China. Your comments really encourage us to realize our video value and update more useful information. Please press like, subscribe now for actionable insights and win-win solutions. Not to miss the possibility to understand and make money in trades with China.